Welcome to a brand new episode, TF Team, between dollars to dreams. We're dreaming on the outside. Love it. I'm back. I'm back, baby.
Oh, goodness, he is back, unfortunately, but we'll do the best. They took me away from my normal habitat and brought me outside. So
He
this
needs a
is
little
all.
bit of sunshine in his life, and I'm back. So, welcome. It's been newsworthy since I'm gone, and we're happy to be here with you recording a brand new episode. It's the fall, and hope your finances don't fall through the floor or through the roof or wherever you wanted to fall. But we wanted to stay steady, but we can't guarantee anything, right? But let's talk about the news. First of all, last week, interest rates coming down.
That's right.
U.S. and Canada.
That's right. That's right.
What does that mean for us?
Well, what it means is that overall borrowing costs should start to come down. We're also looking, if you're thinking of getting into the housing market, things will probably pick up. They'll make it more affordable for the average Canadian. Overall, it's kind of a good first step. Inflation is still okay around the
still manageable
2% mark. I mean, the Bank of Canada, they love it to be between 1 and 3, and they aim for the middle for 2%. So this is where we are. So some good news that are coming into the marketplace.
And your favorite holiday of the year, Halloween, is coming. And of course, the reason we're talking about that is because that's like the timeline of where the effects of the tariff and on goods might be creeping in for the holiday season as well. So how do we deal with that now? We've talked about it in several episodes before about ensuring that we're building up that fund, the emergency fund.
We should have done it before, right? Because we're actually going to see. I mean, you could take a look. Year over year, when you're going to go buy your kids their costume, you should see a steep increase as a result of that. If the producers did not take advantage of buying in bulk prior to the tariffs coming into effect. So
what did you pay for your Wonder Woman costume last year compared to this year? We'll do a comparison. And we'll let you know.
We will.
It's the airplane going off up there. It's all happening.
This is the beauty of being outside.
Beauty of being outside.
Yeah.
All right. Other news-worthy events. The stock market showing signs of being really near high based on what we're seeing today. So where does that lead us? You said, though, that the fall is where it kind of corrects itself?
Yeah. I mean, if history is any indicator of what could potentially happen in the past, we've seen September, October tends to be where crashes have occurred. Now, the TSX, the NASDAQ, the Russell, you name it, all the major index are way up high. So we are due to a correction. What does it mean for the average Canadian? Nothing. Just if you've got a good plan in place, stay the course. The only thing, if you do see the correction, if you do see a little dip, buy on the dip. This will be kind of a great opportunity to buy, because it would almost be like BOGO. Buy one, get one free. Things are at a discount. So just wait until the correction to potentially buy more. If there is no correction, just stay the course.
It's a long-term game, and we've said that time and again. If you just keep it there, you'll see that your investments over time has grown. We look at TD, our favorite stock, our dividend stock, now growing. It's about 109 as of today that we're recording this. So we are seeing that potential over time. In just about 8 months, 9 months.
This is a great example of, we saw a correction. We saw TD stock because some bad news occurred, right? Whereby they had issues with the U.S. money laundering type of issues. Their stock went down to 77. The fundamentals were still, stable about TD. So a lot of individuals, ourselves included, we bought in at 77, and
Yeah.
then now at 109, one might think that maybe it's it's
Overvalued.
overvalued.
But
But
we've seen all the bank stocks go in that direction.
that's right. That's right.
So if you're an investor of the banks,
Mhm.
which the gentleman to my left appreciates
Yes.
because of the dividend that he gets,
Yeah, beat
because
that.
of his pain in his knees. He needs that dividend and that security. He
Yeah.
can't afford to go out and buy those risky stocks.
That's right.
But if you're looking, of course, to your investments and you're seeing corrections and you want to have a look at your portfolio,
Mhm.
contact the team
Yeah.
and have an assessment of that.
Mhm.
Whether you're looking to further enhance your investments
Mhm.
in segregated funds, or you're looking at what opportunities there are for you.
Mhm.
Just that's where the team comes in.
Yeah, I mean, the bottom line, we never are going to provide you with investments that are
Yeah.
riskier than what you could take, right?
Yeah.
We're not going to sacrifice an extra percentage
Yeah.
so that way you could potentially lose 10 or 15.
Yeah.
We'll take a look and see how much do you actually need. Is it 5, 6% per year? So then let's provide you with that peace of mind. So that way you can watch the news and not lose all your hair, as it has happened to me in the past.
That's
Right?
correct. Any other newsworthy event that we missed? I know the stock market is we talked about. Housing has always been
Mhm.
an issue of
Mhm.
contention
Mhm.
for everyone.
Mhm. I
But
mean,
with interest rates coming down, that might
yeah, I mean, again, this is kind of leads me to believe that we're due for a correction.
yeah.
If you believe that housing starts are kind of a leading indicator,
Yeah.
which will tell us what will happen in the future, then we're seeing that housing starts are actually gone down, especially
Yeah.
in Ontario. So that will tell us that maybe a bit more doom and gloom in the future. Again, this is, some people see that, the glass half full, or what have you.
Mhm.
I still look at that potentially as a buying opportunity.
Yeah. And what has been like puzzling to me to some degree
Mhm.
is we see inflation cooling,
Mhm.
but gold is still going up because gold has always been a hedge for inflation.
Mhm.
So the market is it's kind of like
Mhm.
uncertain. Well, you see market uncertainty, but
Yeah.
it's really you're not really sure what to
Mhm.
make of it. But that's where you have to just trust that long-term plan.
Exactly. I mean, yes, in years past, we've seen that gold is, or precious metals, a hedge for inflation. But gold is also where most individuals kind of fall to when the world's a hell in a handbasket.
Yeah.
So now, depending on who you speak with, we're at the precipice of
Mhm.
a lot of negative stuff. So people are gravitating to gold and precious metals. And as a result of that, we're seeing that gold prices are going up. Bottom line, there will always be this uncertainty.
Yeah.
Have a plan in place that will buffer the ups and downs in the market. So speak to your advisor. If you're dealing with a bank, go to your bank advisor. If you don't, we're always here to assist you to make sure that you've got the right plan in place to make sure to go through the ups and downs of the market.
Well, that's our first episode for the fall season premiere, if you will. Thank you for joining us today. It's been a pleasure, and we'll be back with a brand new episode between dollars to dreams. Like, subscribe, contact the team, and remember, we will not send you any
Mm.
link for you to send us your information
Mhm.
unnecessarily, or for you to pay us to do
Mhm.
any
Mhm.
whatever it is,
that the scammers
yeah,
are
the
looking for.
scammers are looking
And
for
and
your yeah.
yeah, because we've seen that the scammers are always out there.
Yeah.
We at TF Team, we don't charge anything. This is advice that we provide is free of charge. We will never solicit you, send you a link for you to click here or there. If you want to get a hold of us, right? Here's our email address. Here's our information. Just contact us, and then you'll have either myself or a member of the team speak to you directly. And then from there, we could take it wherever you want to take it.